Good morning everyone and welcome back to Morning Markets on Tuesday the 13th of June. Today we're going to be discussing global equity markets and bond markets, in particular the UK. You'll see on screen a strong set of equity price performance from yesterday, and we're going to cover that in more detail for you. Okay, so let's begin with global equity markets. What we're now seeing is what we would describe as earnings momentum, which was originally coming from Japan, but is now filtering through into the US. So Japan has led the outperformance of equities through this quarter so far, but what we're now seeing is that the US and indeed parts of Europe are catching up via earnings revisions. So that is the earnings recession, which began towards the end of last year, particularly in the US, and dragged down equity markets before, has now turned. And we're likely to see an end of 3 quarters of successive earnings contractions at the end of this quarter, and markets now expect small, modest growth of earnings in the US Q3, and that's now feeding through into price valuations. So we're seeing a broadening out in equity strength, and it's good for global economies that we're seeing this, and it bodes well for future price performance. Now, what else is going on in bond markets is to do with the UK. What we've noted recently is that the bond market in the UK is underperforming. That is, yields on bonds issued by the government here are rising quicker than the US. And one of the reasons for that is the strength of the jobs market. So we have data today through early Q2, and that's showing that we continue to see jobs growth which exceeds expectations from Monetary Policy Committee members. The good news about that employment growth is that finally the UK has recovered all of the jobs that were lost as a result of the original COVID outbreak. And in fact, the composition of that jobs growth is very strong. We've now got 1 million more people in payroll employment than there were before the pandemic. And we've now got more people in full-time employment than we had before the pandemic. And that's coming from a shift from people in part-time employment going into full-time employment. And this bodes well for growth if people are having more take-home pay. And of course, that's corroborated by the average earnings data, which also came out this morning, which shows us going back to a high of about 7.2%. So that's way too high for an inflation target of around about 2%. So this likely poses a challenge for the Bank of England towards the end of this month when they meet for the Monetary Policy Committee meeting. In fact, they're likely to have to guide markets higher in terms of where we expect base rate to end up by the end of the summer. Markets expect base rate to possibly go as high as 5.5%. It's 4.5% now, so that implies that we've got a full 1 percentage point of increases likely to come, and the bank may have to signal more. But it's all because there are signs of a re-acceleration in the jobs market in the UK, and that should feed into GDP growth data when we get that next month. So it's good news for now. Thank you. Take care.